Hello and welcome to Switzer Investing TV. I'm Peter Switzer. Thanks for joining us. On today's program, I'll be talking to Mike Gable from Fairmont Equities, and I've asked him to look at a number of shares that look really interesting at the moment to see if the charts are telling us if it's buy time or not. Then we'll go to Adam Dawes of Shaw and Partners. I'm going to ask him about why that company, that broking company, gave the big thumbs up to Tyro. And I also want to ask him what he's seeing in this lithium trade. Is it the buy time for lithium? The prices are low. Last Friday, lithium prices went for a bit of a rise. Just see what the broker is saying about lithium. And finally, I've asked Simon Presley from a company called Propertyology, that's the website. I interviewed Simon during COVID, and when all the economists were telling us that house prices would fall by 20 or 30%, Simon, who is an expert on property, said, no, these guys are going to be wrong. And he was absolutely right. I've caught up with him and I've asked him why and how he got it right and what he's seeing in his property crystal ball right now. So that's the show. Let's kick off now with Mike Gable of Fairmont Equities. Thanks for joining us, mate.
Thanks, Peter.
Let's kick off with, as we always do, looking at the overall market, and particularly the Aussie market. What's the charts telling you?
Yeah, the Aussie market's looking great. Obviously, the US market's been trending nicely for a while, and it's nice to see that, despite those very slightly off inflation numbers last week, markets are still going up. So it's not all about rate cuts. I mean, as we've seen with the reporting season, a little bit better than expected. So, I think that the rally is sustainable. And in terms of our market, I think it's really only just beginning. So, this is a weekly chart of our market. And I've mentioned this setup before. So basically, we've got a situation where, since 2021, there's been a very obvious resistance level up here near 7,600. And we've basically been spending a lot of time under it. We didn't have this big pullback with everything that's happened over the past couple of years. We've essentially traded sideways, a bit of a frustrating market at times, but now it is breaking out. So
a good sign.
That's a great sign. And because this level of resistance has been in place for so long, we're not talking a move that will just last a few weeks or a few months. I mean, we're talking a multi-month move from here. So for the rest of the year, it's looking really good for our market. Yeah,
good. Exactly what I told one of my financial planning clients today. So I'm glad you've reinforced my view. Let's go to our first company. And this one is, a lot of my subscribers to the Switzer Report have asked me about, this is Calix, isn't it? Calix, CXL?
Yeah, look, it's not one I follow.
No. Either way, that's why I thought I'd pester you for it.
Yeah. But we could see the way it's trading. Unfortunately, it is still in that downtrend. So we've got the lower...
Did really well here for a while, didn't
it? Yeah, exactly. I mean, my understanding is they're involved in sort of ESG type, products, green investing. So
there's some sort of honeycomb product, but it's not actually honey, but it's some sort of honeycomb product. Yeah.
Look, I don't know anything about
Bacchus Marsh it comes from.
I have to admit, but as we could see on the chart, it's not one that I would want to start looking into in a hurry, because it still has that downtrend. I mean, at the very best, it needs to at least get above this blue line, and then you might see it head sideways for a bit to build a base before it's ready to head higher. But unfortunately, at the moment, risk is still to the downside on this one.
Okay, let's go to our next one now. And this is Pilbara Minerals.
Pilbara Minerals.
And it's a nice Friday. It's the most shorted stock on the Australian stock market. What's the market thinking about this company right now?
To me, it looks like they're going through a bottoming phase. So, beyond what the charts are showing, we can see that, a number of smaller mines are closing down. Some of the smaller players are unable to get funding. So you normally see that towards the bottom of a cycle. Day by day, it's still pretty ugly out there in lithium world. So, quite big swings in share prices. I think the benefit for PLS, because it's heavily shorted, is I think we're starting to see a bit of short covering. So it has held on really nicely since December, whereas the likes of IGO and LTM have slipped a bit lower. But the way, so what I'm trying to indicate here with the weekly chart, to me it looks like there's very good buying support. Anytime it gets to sort of the lower threes, it has been bouncing quite nicely. So at the very least, it'll head sideways for a bit longer. I think the downside, I'm pretty confident the downside is over with.
Yeah.
It's just a case of waiting for this bottoming phase to finish, and then it can start.
So
to
for a patient
again.
investor, this could be a reasonable entry point. And just wait for the change in attitude around electric vehicles and all those sorts of things, and it'll be a beneficiary. Let's go to the next one now. And this is Zip. It's had a big bounce. I often ask about this because a lot of people got in at higher price and they asked me, should I hold? It's good to see that it has bounced. It was kind of linked to a firm, a US rival, allegedly showing some interest. Is the market believing it?
Look, it still looks like it can head higher. I think when we looked at it back in January, we had these sort of initial moves higher, and I noticed that volumes were good on the way up, and then volumes dried up on the way back, which is what you want to see. And that is continuing. So again, we've got this sharp move higher here, big volumes, another sharp move higher, big volumes. And then in the past few days on the way back, the volumes have dried up. So so far so good. If you're in this, it looks like it, it's still a hold and it can continue to head higher. I don't know how high, but momentum's on your side.
And this is a company I think we might have mentioned when we first started talking about a few months ago, that it should be a beneficiary of interest rates being cut. Now, it hasn't happened yet because they do borrow lots of money to run their business, but the market always jumps in ahead of an event like that, and there's probably a part beneficiary of that. And a firm's probably looking at the low share price and thinking, this looks like a bargain right now. Pick of the US dollar is still relatively strong.
Yeah.
Let's go to the next one now. And I know I was asked about Tyro, you know why, because I've lost money on Tyro. But it was a part of my Zeets when I looked at, and a lot of our subscribers are in Tyro. And Shaw & Partners actually came out with an upgrade on Friday.
Yep, okay.
Putting it around $1.60. The target price. So I thought, well, what is the overall market doing with Tyro? No signs that it's ready to get moving yet. I mean, as we could see, sort of very generally heading sideways. A bit more closely, you'll notice that it is still making slightly lower highs, which isn't a great sign. But nothing massively negative about it. I think it's just, I just can't see good buying support coming in yet, but at the same time, I'm not seeing the big sell-offs that we have seen in the past with Tyro. So at the moment, it is quite neutral in the way it's trading. Sort of poised, and it looks a little bit like it's trying to bottom, but still, we probably need a little bit more of a catalyst before it moves off. Yep. Let's go to the next one now. Now this is Lendlease, interesting company. Yeah. Lots of office blocks, but a diversified business. Analysts kind of like it, but it hasn't done well.
No, it's just, I mean, they've reported this morning. I haven't looked at the results, but I saw the reaction and it wasn't pretty.
Right.
But we could see even before today's move, it was clearly in a downtrend.
Yeah.
And it doesn't look like today's announcement's going to be the catalyst for that to end. So very much avoid for now. Revisit it in the future, but you don't need to be there at the moment.
No, and in 4 or 5 months' time, we'll just see if a bottoming process is happening. Eventually, it's not a bad company. It's just got a lot of office blocks, but it's got other parts of business as well. Okay, let's go to the next one now. Now, I'm interested in Chalice because it's a nickel producer, and we know that the government put nickel producers on like the rare earth list, and they're kind of assuming there's going to be a tax benefit from it. It's had a shocker, and it's probably too early to see if that announcement last Friday has any durable impact. But
still,
it's up to you, mate.
Again,
it's up to you.
Still too early. So very much, quite obviously downtrend. I don't see any sort of basing yet. This is a weekly chart, by the way, so there have been periods where it's jumped pretty well for maybe 1 or 2 weeks, 2 weeks maximum in a row, but then that gets sold into. So a couple of little green sort of candles here. So in the last couple of weeks, it has edged higher. On the day, it probably looks spectacular, but on a long-term chart, it's hardly a blip. So unfortunately, this is one of those things where, it might seem cheap at $1, but you probably need to see it, trading above $3. So it really needs to get moving, and show that there is evidence of proper buying coming in. I mean, even back here, during this phase, even if you waited to this point here, which is where it sort of based out and then started to break higher,
you still made good money.
It was still good money. You just didn't have to take the risk of buying it here, which could have ended up, a situation like that where it's all the way down there. So it looks still too early.
Yeah. And part of the reason why I like you to look at stocks like this. By the way, Tim Goyder, who was chair, still on the board, has put a lot of money into this company when the share price fell here, I think, and then has watched it go down even more. But these are sort of companies, eventually you think they turn around, and it's why we look for the bottoming process. Not here right now. No. Let's go to the next one now. Fortescue. Now, in your time, you've liked Fortescue?
Yeah, it still looks good. I mean, this is the one where we were talking last year about this major level at $23. And
the analysts were pretty negative on Fortescue. You got that one right. Yep.
So they're still negative. I think instead of a 15, 16 target, their target's $20, something like that. Look, ever since that breakout, it's been trading very well. I mean, I'm surprised that after that first move, it hasn't actually dipped even more than that. So, good sign of strength. It's making its high highs and higher lows. So it's at the moment.
All right, but here's my question to you: if you're not in it at this point in time, do you think the price is a little bit on the high side to get in? But if you're in, you may have bought it at a lower price when we were discussing it. Is it worth holding it to see it sneak higher?
I think it's still worth buying on a dip. I mean, the iron ore price is quite volatile, and I think on the way into the studio it looked like it was slipping again, so that might provide an opportunity. But the price of iron ore is very closely matched to what's happening with global growth, and if this year should be a recovery in global growth, especially in China. There's some interesting travel numbers out, I think this morning or over the weekend. So that economy will improve from where it is at the moment, and where it has been in 2023, the iron ore price follows that. So it should be a good year.
And I've got a positive view on China for a number of reasons, and I wrote it today in the Switzer report. But Junbei Liu's been telling us that she thought China was on the improve, and one of the reasons why she stuck to A2 milk, which is up about 16% today. So I'm sure she'll probably be drinking not milk tonight, but probably champagne. Let's go to the next one now. Paladin. Now, Paladin, of course, is the uranium play. A lot of the climate change activists are starting to become a little bit more supportive of nuclear. Are we seeing this as a buying opportunity, given what the charts are saying?
Yeah, I still really like this one. So we've looked at this one a couple of times last year. And look, I know it's done really well since the start of the year. I don't know, I think it's up sort of 40-something% just in the past several weeks. But the reason why I brought this monthly chart is to show that it's really only just starting the move. So, if it's down a few percent every now and then on a particular day, I wouldn't panic, because you've got this very large base. So after the sort of 2011 to 2012 sell-off here, after the Fukushima disaster.
Yeah, I was going to say, is that the Fukushima?
Yeah. So that's when that disaster happened.
A really well-named plant, wasn't it, Fukushima?
Yeah, that's right.
Really well-named.
So, obviously there was that disaster. Uranium was on the nose a bit, but the Japanese continued to honour their uranium contracts. So there was a bit of, the supply was still being met with some demand, almost sort of artificially. But all those stockpiles have been used up, and as we know, the supply is very low now. So very long base, came up to retest it only a few years ago, consolidated under it. And I like the fact that this happened over a very long period of time. So there was a lot of selling of palladium during this time, but all that selling dried up, and now it's only finally broken out now. So
it's a pretty substantial break too, isn't it?
Yeah. So when you look at a chart like that, and you understand that the longer a stock forms a base, or the longer it consolidates, the bigger the move when you get the breakout.
Yep.
I mean, you've got let's call it a 10-year base. It's not going to end after 1 or 2 months of moving higher. You're going to get a multi-month move, and I could put my hand anywhere here, but we could even still be looking at sort of pre-Fukushima levels, which is quite substantial upside. So.
And we should say this is not advice, this is your best educational view on the matter.
General advice, but do your own research.
Yeah, exactly right. Let's go to the next one now.
Domino's Pizza. Yeah, look, another ugly chart, unfortunately. So as we could see, it's quite dominated by the big sell-offs every time there's a problem. Again, most recently, we had that large sell-off. This is a weekly chart. Look, it has headed sideways, but if I was to zoom into a daily chart, I've noticed that every little bounce it's still getting sold into, and it's really struggling to make any headway. Okay, after that particular week, it hasn't become worse, but it's to me it looks like it's just biding time until it continues sliding a bit.
In the early days of Domino's dominance of the pizza and the technology delivery part, and that was, we started calling them a tech company rather than just a pizza company, but there's so much competition for them now, isn't that? And they've had other problems as well in various markets, but they always were famous for bouncing back after a sell-off. At this point in time, it's hard to get supersonically confident about Domino's.
Yeah, it's still too early.
Yeah, too early. Okay, and have you got one of yours today, or you thought that you've done enough work?
Yeah, so thought I'd bring one in. So Charter Hall.
Yep, Charter Hall, courageous call, mate.
Yeah, it is. And
well, it's a great company.
That's why I think it might work.
Yeah,
so
it's a very good company. It's got the problems around office blocks and stuff like that, but it's been a good company. CHC.
Yeah, exactly. So all of last year, if you had to ask someone what's the worst sector to be in, they'll probably say office property. I mean, apparently no.
And LLC, Lendlease has kind of proven it.
Yeah, there's the other one. So, clearly an environment of lower occupancies in offices and rising interest rates, not good for this sort of sector. But now we've reached a point where clearly rates have peaked, and there is more evidence of companies trying to drag employees back into the office.
And there are more in the CBD. You must go at lunchtime and see that the queues are longer for lunch.
Yeah, so look, that's it is a bit anecdotal, but it'll take some time. But at the end of the day, CHC very leveraged to what interest rates do. So when it becomes clearer where interest rates are going, it's already started to move. We could see that's the downtrend, broke the downtrend. And they're great operators. I mean, their occupancy levels are actually pretty good. So
they have the best of buildings, and like A-grade buildings.
Yeah, and they're in terms of office property, it's about a third of their management. So there is a bit of
diversification.
Diversification as well. So Goodman Group, which is obviously the leader in the REIT sector, if you compare, so that's the all-time high there back in 2021 for Charter Hall. Goodman Group's equivalent share price is now up here. So it's at all-time highs, and I think there'll be a bit of catching up with Charter, as I said, as rates come down and the negativity, which was so one-sided around offices, starts to dissipate a bit more. They report on Wednesday, so we'll see how they go.
Okay, great stuff. Thanks, Mike.
Thanks.
It's Mike Gable from Fairmont Equities. And that's our first interview of tonight's show. If you want to see the rest of the program, you will need to be a subscriber to the Switzer Report. Please go to switzerreport.com.au.